Hi everybody, this is Kevin with Leading Edge Financial Planning, and today we're going to talk about real estate. Is it a good investment for you? And so we're going to go through 5 steps to try to determine if rental real estate, if a property is good for you to invest in. But at a higher level here, we're also going to talk about, is rental real estate a good investment? But the reason probably why you're interested in investing in rental real estate is because you have a friend, maybe a family member or someone else that's made a ton of money in real estate, and they said, you should do this too. Real property is just that, it's real. So people like that. Many people like the fact that they can, hit the brick with their arm. They can see the house. They can see the apartment, whatever it may be. Whereas stocks and bonds is something that, you see your statement. So for many, this is a way to diversify the types of investments that you're in. So there's lots of positive reasons to invest in real estate. I mean, one HGTV show I used to watch, the guy used to say, all you have to do now is go to the mailbox and cash the checks. And so that's the positive part of real estate. The thing that I've seen with some people is that they don't really go through a process. And I recommend, and that's why we're talking about the 5 steps today, about how you can successfully have a good experience with rental real estate and make some money. Now, there's no guarantees. Every property is different. Your situation is different. But we're going to go through at least, I think, 5 prudent steps. So the 5 steps are, I'm going to buy the property. Will I be able to sell it for more than I buy it for? The second one is, am I going to be cash flow positive? The third one is leverage. That is, I'm going to borrow money. How much money should I borrow? What are the risks and benefits of doing that? The fourth is, what are the tax benefits for me, especially if you're high income? And then the fifth is to say that all other 4 are important, but how am I going to weight those? And how am I going to make my decision ultimately if that property itself is good for me to invest in? So those are the processes that we're going to go through here. Now, there is one bonus step, and that's the step of being a landlord, but we'll talk about that at the end, because ultimately that's the decision many times why people will go forth or they'll not go forth with being a landlord. So step 1. Okay, so you understand your marketplace. You understand at least if it's growing. Okay, in Knoxville here, I've heard that real estate is growing by 1 to 2%. Maybe some real estate professionals will tell us it's 3%. But understanding your marketplace, because if you're in a brand new, exciting part of the country and they're building and property is accelerating in value, and you say, I'm going to own that property for 10 years, then there's a high likelihood that you are going to make money between the purchase and the sale. Now, what people have said recently, we're here in 2019, is that the real estate market's in a bubble and it's gone way up. And so that could be true. So you might not be able to sell it for more than you bought it for, but you at least should make some projections. Okay, and that brings us now to number 2, step number 2. And this to me is the most important step, is the cash flow of the rental real estate. Happiness is positive cash flow. So we take the amount of rent you get, we deduct all the expenses that you have, and is it economically going to be a net positive? Okay, so that's cash flow positive if it is. Now, I would suggest you use a fancy schmancy spreadsheet like we have, and you use the spreadsheet, you put in your numbers, you find out what the rents are. At least this is going to be an exercise to make you think about it. But if it's cash flow positive, then even say, all right, I'm going to take 1 or 2 months a year where I'm not renting it, or I have to replace something, and put that in every year and see if you have a little bit of wiggle room there. And so cash flow positive is extremely important. If you're cash flow negative, not only do you have to answer the phone and talk to tenants, but you're actually taking money out of your own pocket. So, and you'd be surprised. Sometimes people will get into a property that turns out to be cash flow negative. So at least go through the exercise. Number 3 is other people's money, leverage. Okay, that's one of the things that many people love about real estate. I can borrow money from someone else, just put down a small amount, and then I can get paid and make a really great return. Okay, and what are the returns? Again, you might be able to make 10%. You might be able to make 5% a year, and then hopefully at the end of the time period, you also can sell the property for more. But have an understanding of the fact that leverage is very positive. It can really accelerate your returns, but it also has a danger to it. It cuts both ways. So most loans for rental real estate are balloon loans. And what a balloon does, you see a balloon floating in the air and then it pops. Well, a balloon loan, let's say it's a 5-year balloon loan. After 5 years, whatever the balance left on the loan is, you have to repay in full. Of course, you can refinance, but what if we have another 08, 09 where all of a sudden the rate to finance goes way up and now you're paying 12% or 10% instead of 4 or 5% that you're paying now. So leverage cuts both ways. So think a little bit about, ponder the amount of leverage that you should have. Step number 4 is, will you get a tax benefit? You see, before we talked about cash flow positive, and it was just an economic cash flow positive. But rental real estate has something that's called the depreciation shield. It's part of the tax code that actually benefits us. And so you get to use depreciation as an expense. So let's say the property is cash flow positive, $1,000. After depreciation, we're actually showing up on our tax return that we're losing $4,000. And that's because depreciation shield is not a real expense. I won't get into it here. But for high-income people, this can be a fantastic way to get income and not have to pay 30 or 40% tax. So the depreciation shield is very important. We understand tax. If you want to know more about the depreciation shield, please get in contact with us. Okay, so for high-income people, that's extremely important. And then step number 5 is take the other 4 steps and try to figure out which are the ones that are really the most important to you. Are you looking for cash flow? Are you maybe going into retirement and you're going to live off the rental income of a property? So cash flow positive is even more important. Or is total return what you want? Is the tax benefits? I mean, all of these are a part of it, but when you go through all these steps, then you decide in step 5, is this a good deal or not? Should I go forward? So that's extremely important. And then the final bonus step is, do you want to be a landlord? And so what are the questions that you can ask yourself if you want to be a landlord? Well, I think probably one of the best questions is, do you mind being disturbed? You know, the worst situation would be someone calls you on Christmas Eve or Thanksgiving. That's not usually what happens, but are you a person that can deal with it without it ruining your day, your evening? Do you get that concerned about it? Do you get concerned about having to kick people out that don't pay rent? Now, some would say that you can use a management company. And so, okay, if you're not somebody that wants to do rental real estate, but you want to hire a management company, then again, you need to find out, are you going to be cash flow positive? How much room do you have if something does go wrong? So you can still do it if you don't want to be a landlord, but I think that's a really important part of it. So the final thing I want to mention is that at Leading Edge Financial Planning, we are financial planners. I've had over the years clients call and say, I've been thinking about rental real estate for years, and I'm like, well, why didn't we talk about it? And they said, well, you guys are financial planners and you do investing, but I didn't think you'd like to talk about rental real estate. Well, I'd love to talk about it. It has investment returns. It has cash flow, which are like dividends. It has a possible tax benefit. And it can be a diversifier. So I think it's a fantastic thing to talk about. And we're happy to take you through these steps and talk about what are the different things you could do with your money. You could put it in rental real estate. You could put it in stocks, bonds, CDs, but you can put it many different places. And so we can talk about, is this a good part of your financial plan? So thanks everybody for watching. If you have any comments or questions, please leave them below. Please like the video. And please follow us on Facebook. So thanks so much for watching. Take care.